So as Sarah mentioned, my name is Stephanie Llamas. I am VP of Research and Strategy at Superdata Research. I also head our VR, AR research and strategy. And if you don't know who we are the leading provider of digital games research and data. We have a network of partners that range from payment providers and developers and publishers who provide their point-of-sale transaction data. So we're able to use data to form the foundation of all of our forecasts and estimates. This includes 78 million unique users who've spent $3.2 billion in transactions. And it includes 42 of the top 50 publishers worldwide. We also look at consumer insights from 78,000 consumers worldwide. And a lot of the data that you're going to see here is actually from our VR data network. So it functions much like our general transaction network. But this data that we get from VR companies is more in line with what we actually can measure. So impressions or engagement or the things that are really valuable to us right now. So we have partners that are headset manufacturers, developers, content creators, platforms, and this is a way for us to improve the transparency and offer insights on an industry level that's valuable for everyone as we continue to grow. So if you'd like to learn more, you can go to our website, superdataresearch.com, superdata-vr-data-network. So all of the boilerplate aside, what you guys want to know about is investing and money in VR. And so in this last year, we've probably all heard a lot about how VR didn't meet expectations. I personally don't think that that's the right way to categorize it. VR is a new medium, it's transformative, and it's very difficult to get in the hands of consumers unless consumers are actively looking for it. So we actually saw, I think, a really great first start, especially in terms of the way that we naturally grow in a market like this. So it starts off a little bit flat, and then it shoots up. And so in 2020, we foresee the market hitting $37.7 billion, and so it will be increasing 21 times what it was last year, which is quite a bit. Even though we're not going to see that same increase of growth over the next couple of years, we will see a boost once we start to see more headsets that are affordable, more big names in content, more consumers getting headsets into their hands. And when we look at investments, if you look at investments between 2012 and 2015, putting Facebook and Oculus aside, investments equaled $2 billion. Which is an impressive amount over 4 years, but it's especially impressive that in 2016 there was more money invested in VR than in 2012 to 2015 combined. And this was when a lot of investors started to see the potential of VR that was difficult to see before consumers actually got their hands on it. So in 2016, once headsets came out and consumers were able to see what there actually was in the market, we saw that VR users were highly engaged, highly interested, and there was a huge potential that now investors are seeing. But if we compare growth and revenue and investment, this is a difficult topic to really understand, right? Because just because there's investment doesn't mean there's necessarily revenue. And investment is good up to a point, but a lot of investors are under the understanding that ROI is going to be quicker than it actually will. So as you saw in the revenue chart from before, that flat line is going to be a couple of years. Not flat line, but slow growth. And so ROI will begin to flourish after 3-5 years. And that's hard for investors to hear unless they're really in it for the long haul. And so as you can see, revenues really haven't built up to what investment has been. And that'll be the case as we move forward into the market up until 2019. Looking at games specifically, we see the same issue. It's not quite so big, the gap between investment and revenue in 2016. So that's good news because it shows that games are really starting to find their legs and are becoming a big part of VR. It shows a natural relationship with VR as well. The interactivity, the playability, there's a lot that consumers can get out of games that are difficult in other platforms, but especially in terms of monetization. However, it's really important to understand that games are still a fraction of the revenue that we're seeing from software, and the investment dollars that we're seeing is still very high. So if we look at the share of gaming investment versus revenue, yes, in 2015 to 2012 to 2015, games were most of the revenue, but there was monetizable game content very, late in the year. It was difficult to get up front. So it's something to just keep in mind, sort of the landscape and the opportunities that we've seen in investment, but sort of that imbalance that is something that won't start to balance out for a few more years. And so I think something that's really important is, as I mentioned before, there's a life cycle for a medium. VR is not a platform, it's a medium. So when we think of VR, we need to think of it as television, as PCs, as internet, as smartphones, because it really combines a whole number of media into one device, into one technology. And it really is a medium. So this helps us because as we look at the landscape and the historical narrative of media and growth, we see a pattern, right? We see that slow growth and then that shoot up. So that's very promising because we know that happens and we've seen it before. And so when we take a look at VR users, there will be a slowdown. This is not bad news necessarily. The slowdown is accounting for the fact that there are a lot of cardboard users who maybe are one-offs, who got to try it for whatever reason, but are not really VR adopters, right? So we'll really start to see a concentration of VR adopters in 2017, this year, 2018, and then a shoot up in 19 and 20. So this actually is good news to a certain extent because the quality of the user is increasing. You're getting people who actually are buying the devices or are interested in buying the devices. So then again, you're seeing that same slow growth with VR. When we look at adoption rates in the US, we see that a lot of the patterns that we've seen in previous media, we're starting to see in the early days of VR, and this really can inform the type of life cycle that we expect from VR. So when I say that VR is not a disappointment in 2016, it's not. It's natural growth. The fact that it was able to take off is very promising. But the idea that that we need to invest heavily now that everything has started to jump forward without thought behind it is dangerous. So again, you see that slow growth. And in 2020, you'll begin to see more and more households with multiple headsets that the family is using. And so, as you know, VR is something that you can't explain. It's something that you need to experience. It's difficult to conceptualize, almost impossible, I would say, if you've never actually been inside of a headset. And I'm sure you guys have had the experience where you're telling someone about what VR is like and you don't have the words. So most people don't know what VR is like and haven't had that experience. And this is a huge barrier to entry that we're still trying to deal with because you need to ask the consumer to be proactive. You're asking the consumer to have the interest enough so that they will seek the experience out, especially because it's hard to get your hands on a headset accidentally. A lot of times people learn about VR from their friends, from their contacts, and then occasionally they'll be at a store that's offering it, or we saw it at JFK Airport. There was an Oculus stand. It's very rare. So this is a huge barrier to entry, but this is something that mobile was able to overcome much more than other platforms. So we saw Samsung had announced that up until January, they had sold 5 million devices. So in 2016 alone, they sold 4.5 million devices, which is far higher than any other device and higher than all devices combined otherwise. And it's something that Google Daydream is about to experience as well. Once we start to see more and more smartphones come into the market that are Daydream compatible, we'll start to see more Daydream users. The marketplace is more open, which is very promising for developers. There's still a level of quality required, But the Oculus development platform is a little more closed, and so you're starting to see developers move into Google, and that growth is very promising given the device agnostic headset that they have. So once we start to see, now that we have a Google name behind a headset, there's a lot more interest that we're starting to see on the research side in actually trying the headset. And when you tell someone you tried a cardboard, well, this is better, then we have even more interest. So that's promising, but it's still a barrier at this point. And the other thing is that you really need to offer a seamless first experience, because that first experience is pivotal. If somebody experiences VR and they don't enjoy it because of motion sickness or whatever it is, they can't handle the device, they don't know how to use it, then that's a big problem, because trying to get that consumer back is extremely difficult. So that assistance when they're trying on a headset is hugely important and actually very rare to find, especially in public demos. It's hard sometimes to find people who are knowledgeable enough that the consumer goes right into VR and comes right back out seamlessly. Quality content. So we're all here, I think, to understand what quality content should look like, what quality content is getting what kind of investment, and investment really should be promoting the most high quality content. Something that's important to remember when you're developing for VR is that the best content on VR that we've seen, the most monetized content, is content that was made specifically for the mechanics and the unique mechanisms of VR. So when developers port from another platform to VR, very often it's not a compelling experience. So there really does require this heavy thought and heavy investment on the part of developers that can be difficult when monetization is so clear right now. So quality content is obviously ideal, but it can be expensive. And so can headsets, right? The price of headsets is quite high. Even $79 or $99 for a mobile headset, if someone doesn't understand why they should be spending an extra $100, then there's no way that they're going to feel like it's a justification to spend that money. Even if we feel like for the experience, it's not that bad a price. Okay, so the fact that the higher end headsets are even more expensive are really difficult to convince consumers to purchase, especially when you have supporting hardware like a PlayStation or even more so a PC that costs hundreds of dollars on top of that. That's a huge investment. And so that still remains a challenge for VR. And finally, awareness and interest. We found that about a third of consumers in the United States older than 18, they have an interest in VR. That's not to say that they own a device. That's not even to say that they've tried a device. They just are interested and they kind of know it exists. So that means that 2/3 of the people that we spoke to had no idea what it was or had no interest in finding out. This is a huge barrier we're still overcoming, and this kind of loops all the way back to the rest of the barriers to entry. So these are things that we will overcome, but it will take time, which means that ROI will take time, more time than we see on established, mature platforms. Part of the issue is monetization. There's still a question as to how to monetize effectively. We're not quite sure what the right formula is. So for example, mobile games, it took quite a long time to figure out that free-to-play was the answer. And once we figured that out, now we see a flourishing platform and it's fantastic, but there was a long time when premium content just wasn't being sold because people weren't convinced that they should be spending that money on a mobile game. And then when you say, hey, it's free, but you just can pay for what you like, then people jumped on. VR has not necessarily proven to be the same way. There is a little bit of free-to-play content or premium monetizable content, and it doesn't monetize very well compared to premium. But premium, the issue is there's an expectation on the part of the consumer that if they're going to be spending $10, $20, $50 on a piece of content, it should offer a certain lifetime of gameplay. It should offer a certain amount of quality, and those things are expensive. on the part of the developer. When we've spoken to developers, the biggest issue that we've found developers have is that in order to make the content that would be the quality that they would desire, it costs too much money that they won't make back in the next year or 2 years, especially in the time frames that investors are expecting. So this can be very difficult. And for a lot of developers, it's prudent for them to consider, when monetization is more established, considering if VR is actually the answer and how they want to monetize and use the platform in that way. Now, one thing is that brands are starting to use VR much more. So we're starting to see branded content that's focused solely on the brand, but is developed by VR developers that are putting out their own games and are able to make revenue by working with these brands to develop those branded content. So that's something that is something to consider as a developer, is making these partnerships with brands or with companies that are looking to make a technology that you have experience with. Maybe it's not your game, but that gives you a little bit of room and your investors room for you to explore your own passion projects. And finally, there's an experimentation right now with ad networks. We're trying to see if ad networks are going to work the same way as early mobile games did, early free-to-play. It's a possibility, but we're still just starting to see these ad networks grow, and in the next year we'll start to see even more tools that are easy to implement. So this may actually be a great option, but part of the issue kind of goes back to branded content that developers create that needs to be high quality, because VR users are not going to want to experience branded content unless it's just as compelling as normal content. So in that sense, we really need to consider how branded content is going to work for you and how you should think about it. And so something that brands still haven't considered, which is why their budgets are so low for VR, is that impressions are not the end-all be-all. They're not the measurement that they should want out of VR. It's really engagement. So in terms of software, we saw games were a fair amount of revenue, 44% of revenue for all software. This includes everything outside of consumer software as well. And so that's where we saw most of the engagement with VR. And we recently did a report with Unity where they found that engagement was actually quite high. It was smaller sessions, but frequent sessions. And this is something that we've been working with brands to understand. This is something that we're working with developers and investors to understand, is that we're still seeing slow growth with user numbers, but we are seeing a tremendous amount of engagement. And that comes from quality content. And so right now, that kind of engagement doesn't necessarily parlay to the kind of monetization that we want to see, but it's the start. And these are the types of content that are going to monetize. And so when we see in the future, games are going to become less of a share of revenue. However, they are going to be a significant amount of revenue in 2020. So it's something to consider that when we look at 2020, we should consider the games and the publishers and the developers that are going to be part of this 30%. You should expect that in 2020, there will be a high percentage in the top 10% of companies in terms of revenue earned compared to the bottom 90%, which we see in a lot of other platforms, in most gaming platforms. And so that is also something as an indie developer that you need to think about when you're gaining your investment money, as to whether or not, if you do end up being part of that 90%, you'll still be making enough revenue that it will justify the investment. So in the end, understanding what the consumer wants is going to be key to making that kind of content that's going to monetize and give you the ROI that both you and your investors need. The good news is that VR users clearly love games. VR is easily translatable for games, especially the quality pieces of gaming content that allow users to really engage. And so we found that 81% of users primarily are interested in playing games when they use VR. And that's a far cry from watching TV or watching movies. The issue, again, comes back to monetization. Even consumers aren't quite sure how they want to pay for things. So they see full VR game purchases as the #1 way that they want to pay for things. But we continue to hear feedback that that they're not getting the experiences that they expect for the prices that they spend. But developers cannot sustain themselves on lower prices. So there's an imbalance there. And so it's just part of the fact that we're not sure how to monetize in an effective way yet, because we're still understanding how users are engaging with the content. And asking users how they want to spend money doesn't always mean that's how they're going to spend money. So going back to the type of growth that we will see in the industry over the next few years, it's very promising. By 2020, you'll see this brand new medium grow to the point that digital PC content is now. Digital PC content has been around for much longer than that. So this is something that will show the revenue and the ROI that a lot of developers are looking for. But it's important to understand those different mechanisms: engagement, monetization potential, and the amount of money that you're going to get back and that your investors expect in the same time frame. So thank you so much. Do you have any questions?
Hello, hi, my name is Juan. I was wondering if any of your study, you sort of incorporate the Ready Player One effect that Steven Spielberg movie will have on the general public to discover VR and its potential. Is it in any way taken into consideration in all the statistics? It's March 2018, I believe.
That's a really good question. And yes, definitely. There's a lot more media that we're starting to see that incorporates VR and shows consumers that there is potential in VR. So we've been looking at that when we've been looking at our forecasts. And we see that it's a two-sided coin. On the one hand, it does show that VR is really interesting and can be compelling. But on the other hand, it's almost the Tron effect, where people think, well, but we've seen VR before and it's not been that cool. It's kind of, we've seen all these devices that have not really delivered, and the cardboard might be all they've experienced, and so they think everything up from there is comparable. So consumers, we've found when we've spoken to consumers, they kind of have this inner conflict, that they hear good things, but they're not sure they believe them.
Then, thank you so much, Stephanie.
Thank you
for giving us these insights.